Are you looking to grow revenues, increase profitability, or obtain financing? If so, you came to the right place.
Running a business is all about leadership. How do you become a better leader? Learn from the successful entrepreneurs and business owners how to lead your organization more effectively. That's why we created Leadership Live at 8:05, Talking Small Business, to help you succeed with your host, Andrew Frazier, Business Growth Pro and CFO and founder of the Small Business Pro University. Every Tuesday evening at 8 p.m. Eastern, we're joined by experienced entrepreneurs and business owners who share their secrets to success via Livestream. Also, every Friday morning, we release a new podcast episode. Either way, you will learn about developing your business leadership skills from our roster of highly performing guest experts. Leadership Live is one of the many valuable resources provided through the Small Business Pro University, empowering business owners to learn, profit, and grow. Find out more at sbprou.com.
Good evening, everyone. Welcome to Leadership Live at 8:05. I'm your host, Andrew Frazier, and excited to be here once again with you this evening, talking small business. At the end of the day, leadership is one of the most important keys to success for business owners. And leadership comes in many forms and many ways. So each week we have different business leaders, thought leaders sharing their expertise and strategies and ideas that can help give you the perspective to become a better leader of your organization. And that's really what we're here for every week for you. So first, thanks for everyone joining in. Excited to have you. Please feel free to put questions in the chat. If you want us to cover something, feel free to put questions in the chat as well. You're welcome to also put comments, and appreciate just the interaction as well. So looking forward to a great show this evening. Today's guest really has done some great things. He's had a journey that's taken him through corporate, through creating his own business, through growing his own business. And really, he's been able to do some things for a lot of businesses to help them grow and be more profitable. And that's really one of the key things that all business owners need to do. And today's topic especially is around that, and one of the most important things to becoming more successful. So we're going to plan for uncertainty. I always say failing to plan is planning to fail. I'm not the only one that says that, but it is very, very true. But just because you know how to plan doesn't mean you know how to plan or what it means to plan. So we're going to cover some of that and make it easy, because it's not rocket science. But there's certain things that you can do to really help move your business forward. So that's really what it's all about. So this evening's guest is Nelson Tepfer. He is the CEO, co-founder of ProCFO Partners. Welcome, Nelson. How you doing?
Hi, Andrew. Thank you for having me on.
Okay.
Well over here.
Great. It's great to have you. We had a chance to chat last week, a little bit about what we do. And it seems like we sort of look at the world the same way, or similar ways, and really use that to help business owners prepare their business and prepare them to be more successful in what they're doing. So that's really great, and that's why I'm real excited about having you here this evening. So you've done a lot of things. Your background better than I do, so that's why I didn't give you a long introduction. I'm going to let you do that yourself, and just take 5 minutes. Tell us a little bit about your journey. Where you started, how you got to where you are now and a little bit about where you see yourself going.
Thanks, Andrew. So, depending on how much time we have, is how far back we go when you say, tell us a little bit about your background. So, I'll try and keep it relevant for this conversation. For me, as many, I did not go to school actually for the accounting type of world. When I came out of school, I came out with a degree in finance, and I was all prepared to take over Wall Street. And then an opportunity came up in the business world, and I said, you know what, this sounds a little more interesting. Wall Street isn't going anywhere. Let me test out this business world for a little bit and see what happens. And whatever number of years later that ended up being, I grew that first role into a CFO role, took that company to one of the largest in the tri-state area for what they were doing, moved there to a few other CFO roles along the way over the same period of time. Now, it's probably about a dozen years ago, when I was actually what I thought was happily employed as a full-time CFO, or as I jokingly refer to it, back when I used to work for a living. And a friend of mine reached out to me and said a friend of his is having some trouble with his company. Can I have a conversation and see if I can help? Can I give him some advice? And, I was thinking to myself, help out a friend or a friend. Sure, I'm happy to have a conversation. And that conversation turned into a year-long interim CFO role that I actually juggled with my full-time role. It was a very, very busy year. But what I found by doing this, as anyone who helps growing companies like this usually finds, and I use this word so carefully, it was so much more fun working this way. I learned an entirely new company, new business, new industry, and the things that were day-to-day in my previous role was like magic to a company like this. And I found that pretty intriguing and, pretty impactful and meaningful to be able to work with a company like this and have this kind of impact and have, bring this kind of value. So I went back to my full-time role, converted it into a part-time one, and then started taking on more clients on my own. Across the next 7.5 years, I worked across nearly a dozen different industries with companies from as small as startups to as large as about $500 million or so in revenue, nearly a dozen different industries. Again, really enjoying what I was doing. And over that period of time, kept running into the same challenges when you operate at this level. And I thought there has to be a way to do this bigger and better, to help more companies, to find like-minded individuals who want to help companies this way, to provide this kind of service to them at the right level, the right way that will help them. So along that way, I explored a few different ways of doing this, but that eventually led me to co-found ProCFO Partners with my partner. And we have now more than 30 CFOs on the team, where we help companies build a framework for financial management and growth, not just allow access to our time, but really build out the finance and accounting function so it's systematic, sustainable, and scalable, and built to support their growth and goals.
Great. So no, you've sometimes you become a business owner unexpectedly. That may not have been your plan, but that happens to a lot of people. But once you become a business owner, it's really hard to go back.
That is definitely true. Definitely true. And anyone who's taken that entrepreneurial plunge will tell you probably something very similar.
Yes. So it's very important to be as be as prepared as possible. So when you do it, you don't have to go back. So, no, that's excellent. So, Nelson, it's fall, fourth quarter. And fourth quarter is a busy time for a lot of businesses, but we're also coming up on the end of the year, and it's important to plan for the coming year. And I always talk to people about a lot of business owners concentrate on what's urgent and important, but if you don't do the stuff that's not urgent and important, that's the stuff that really moves your business forward. And that's really where planning falls in terms of everything. So tell us a little bit about how what planning means to you and, what people should be thinking about when they're going to be doing planning.
Sure. So the process itself will obviously look very different depending on the company size, the number of the people involved. So for this conversation, we're probably going to step back just more to, what is it supposed to be doing in theory? And we can get into the specifics as we move through the conversation. So when we think of the planning part, it's one thing just to say, okay, great, we did this amount of revenue this year or this amount of margin this year, and we want it to be this plus a certain amount for next year, which fortunately or unfortunately is perhaps how many business owners do it because they don't have the time or bandwidth to really think about the bigger picture. From our perspective as CFOs, the conversation is a much broader one. as in next year. Of course, you need to plan for next year, but where does next year fit in the bigger picture or longer term plan for your company? What does that vision look like for you 5 years out in that organization? And what's important to recognize is those goals that you put down, or the goals that you think of, are perhaps not just the numbers, right? Every business owner says, okay, I want to double in size in 2 years. I want to have this number of revenue in this period of time. And those are great measurable targets of the goals that are outlined, but we like to think of the goal as separate from those measurable targets, whether it's in a 5-year plan or a 3-year plan or a 1-year plan. And we usually try and look at the planning as trying to combine all 3 of those elements for businesses, or whatever the size business is, because even just identifying the goals that you put down for 5 or 3 years and the measurable targets that help you decide, what is it that you're going to be measuring along the way for those goals. Just the process of thinking about it that way, when you start actually taking action on however you break it down for next year, whether it's quarterly or into whatever shorter periods you choose to implement with, that process of going through that thought exercise of what it looks like 5 or 3 years out. No, it's not going to be as specific. It's perhaps not going to be as targeted. It's not going to be as concrete, obviously, when you look that far out. But putting that down before you take the actions for next year allows you to take the actions that you are already doing for next year to help you achieve your shorter term goals in line with what will help you achieve your longer term goals.
Okay.
So that's where we tend to start from.
Okay, excellent. So, one of the things they say is really, a goal without a plan is a wish. And,
I think that's the nicer version. So I think that may be one of the nicest versions of that state of that one I've heard.
Right. Yeah. There's plenty of other ways, but yeah, definitely, you can want to do $10 million in sales, but if you don't have a plan to do it, then you're wishing. So, what you can do through business planning is really figure out how you're going to go from where you are to achieve your goals. And that's really what it's about if you're going to run your business professionally. So that's what we're going to be talking about today. We're going to take a quick break, real quick. As you may know, this program is brought to you, produced through the Small Business Pro University. So it'd probably be good to know a little bit more about what the Small Business Pro University is. So just going to play a 1-minute video, and then Nelson and I will be back to really talk about planning for uncertainties, because definitely there's a lot of uncertainty in the world today. Do you own your business, or does it own you? Is your business growing, and are you making enough money? As a business owner, there are so many things you need to know to become more successful. Hello, my name is Andrew Frazier, the Business Growth Pro and CFO. I created the Small Business Pro University for you. Small Business Pro University has self-paced, dynamic, multimedia learning experiences created by more than 20 instructors who are business owners just like you. Small Business Pro University will empower you to become a masterpreneur by learning the secrets to creating a successful enterprise, to go from working in your business to working on your business. Take advantage of our strategic coaching program, or just simply choose the courses that you need. At www.sbprou.com, we will empower you to thrive and not just survive, and make more money in any business environment. Welcome back to Leadership Live at 8:05, Talking Small Business. I'm here with Nelson, and we're chatting about planning for uncertainty. And, with a financial management bent, because you can come up with whatever plans you want, but if you don't put some numbers next to them, how do you know that your plan can even work? How do you know if you implement your plan successfully, it's going to give you the results that you want? So it's important to do that. A lot of business owners do not do that to their detriment. So we're going to talk about it, and it doesn't have to be super hard. There's some basic things that you can do to really help give you the ability to understand how your business works and to be prepared and be able to run your business rather than have it run you, because you'll have forewarning of challenges that may be coming up rather than just finding out about them. So, Nelson, you know, I'm doing a training session this week for a company, or actually this month, and broke it down into 4 parts because every company's at a certain point in their financial journey,
Yes.
and it's okay to be where you are because everybody has to evolve beyond that. But when you look at the financial journey of a business, um, what are some of the key steps that you see that you want to make sure organizations are taking?
Well, just to clarify, key steps for what? What stage are we talking about? Is this key steps in the planning process or key steps in general? Because we can,
Okay. Right. And one thing I'm thinking about is maybe I look at it as, you got to get your accounting in place first. So you have to actually
absolutely
account for stuff effectively and accurately and do your taxes. That's like level one.
So we think of that area within our framework as the foundational area of the framework that we try and build. Remember, we said what we talk about when we work with our clients is building the framework for financial management and growth. So what you're referring to is the start of that process, which is like the systems and processes of an organization, and the reporting function is really where this comes into play. So systems and processes, sounds very generic, but for companies, sometimes that can be which actual system, software-wise, they're involved with. For many small companies, that can be a QuickBooks or a Xero or a similar type of foundational program, and they work for many companies. The problem is when they outgrow them, then they run into the issues of what really didn't work for them along the way. But before we get into those, talking about the financial operations is really what you were referring to. How do you build? How do you collect? How do you enter information? Start with the basics of it, because if that's not in there correctly, then no report that you generate will be worth anything. So it needs to start with, okay, how does this actually flow within the organization? And is this current process, are these current financial operations really in support of where we're trying to take the company? So this step is more, we like to think of this even in the context of the planning, because if you say you want to be whatever period, whatever certain size, whatever the goals that you're setting, we look at the financial operations, and everyone should really be looking at the financial operations and their systems and processes. Are these things in place going to support what I am trying to do within this business?
Okay, so no, that makes sense. So that's like level one and the foundation.
Yeah.
I look at level two is, you have these financial statements. They should be used more than just for giving them to the government.
Yes. So now we're talking about insight, not just information, insight, not just data. So right. Yes, there are financial statements, which we hope, companies are compiling both timely and accurate, which is a challenge for many growing companies. And we recognize that, the balance sheet, the P&L, the cash flow statements, those being generated on a regular basis. But the next part of the conversation is, what do you do with that on a monthly basis? How does that give you the insight you need to help you make the decisions you're trying to grow and run the business? So whether it's the KPIs, the key performance indicators you're looking at on a regular basis, they can be financial, as in, okay, last month, what was the metric that we're looking at, in line with the goal that we set, whether that's a top line revenue, whether that's a margin, whether that's a business unit or a product line that you're trying to build out. You want to be measuring that progress and to see if the activities you're doing, which is one of the next things we look at when it comes to KPIs and measuring, is not just financial, but also the operational KPIs are the ones that are actually helping you achieve those goals. For instance, if you set a revenue goal, for this quarter or this year, whatever the time period we're talking about, and you define, you recognize that revenue is generated by certain activities, then coming up with a measurement of, okay, these are the activities I want to be measuring, because I know if I do these activities, I will generate this amount of revenue. Now, this can be for you personally. This can be for your salesperson, your sales team, your sales manager. Whatever that looks like is, what are the KPIs that they're measuring around the activities that will help you achieve your goals? And that's really what we start thinking of, the reporting of the actual insight that you're looking for, the insight to help you run your business, the insight that'll help you grow and achieve the goals you're looking for.
Okay. So that's the next step, is using that information to make better decisions, to understand how your business runs. But there's even 2 more steps after that. as your organization evolves, you want to make sure it really moves into management accounting. And that's where planning comes in, where you're not just looking at the past, you're working on the future and using the past to better prepare and understand what the future may look like. So talk a little bit about what management accounting is and how it works.
So now we're talking about the budgeting and forecasting, and companies sometimes use those terms interchangeably, even though perhaps they are not, but referring to, again, more of that planning and looking forward for this. Now, again, from our perspective, understanding the goals become really important as you approach this step. As I've had conversations with companies where they explain to me, "Oh, we need your help with a budget," and my response is, "Great. What are we budgeting for? You want me just to tell you where you spent your money last year? What plus or up or down or minus a percentage of where you think it should be for next year? Or you actually want to decide where you should be spending your money to support where you're trying to take the company?" So the forecasting and the budgeting conversation are usually, again, we look at those elements in line with their goals and the strategy and the planning side of things, because they define what that process is going to look like. The forecasting, for instance, is not just, great, this year plus X percentage, or hoping that's where it's going to be. How many times do you work with companies where they had this forecast in place and now they approach the third, fourth quarter and it's like, "Oh yeah, we're going to miss our targets. We're not going to achieve these goals." It's because the forecasts are created in some type of vacuum, which is just saying, "Okay, great. We did this last year and now we want to do this plus of this different percentage for next year." So for us, when it starts becoming that forward-thinking process, it's how do we create those forward-looking reports or that forward-looking information, again, in line with the goals that we set for that are set for the company.
Okay. So really we're going to spend a lot of our time on how to do that, because at the end of the day, that's what you should be preparing to do now so that you're ready for next year. But there's even one more level beyond that I just want to at least introduce and have you say a little bit about it, because this level really helps you be able to make the right decisions and figure out what you put in your budget. And that's really about investment analysis and ROI when you're deciding, should I do this project or not? And how do I get the best return on equity? So not just how do I make the most money, because you got to take into account risk and other options. So talk a little bit about how you approach that with businesses.
So for most of the smaller businesses, that kind of conversation usually ends up being, what is the framework we need to create that measures the success or failure of the initiative we're thinking about? Because very often they don't have perhaps as robust of a, as the process as you defined. And I'm sure I'd love to hear your thoughts and opinions on that one as well. So for us, it becomes when the business owner is telling us, "Okay, we're thinking about doing this kind of project, or we want to try this." Our response to them is, "Okay, yes, if this is what you're doing, what does success with this look like in 6 months from now, a year from now, 10 years from now?" Whatever the timeline we want to set that up, because once we're defining the benchmarks for success, then we can analyze it. Okay, great. These are the check-ins we have along the way that lets us know if we're still on track. So we try to make it a simpler process because, again, for smaller type of companies, they don't have as robust a reporting function to support some of what you're referring to. You can call it on ROI or return on equity. We try to make it an even simpler. Is okay, if this is the project you're choosing to invest in, this is what it's going to cost you. How will you know if you succeeded? And we try and define that even before we go ahead with the project.
Right. So, definitely, all those things are important depending on the size of your organization and really the type of industry. It's going to determine a little bit more, how much you focus on different areas and different things. But, overall, your goal should be to move forward through each of those 4 levels.
Absolutely. But Andrew, I'd love to hear your thoughts on that last one as you see it for the companies you work with, that 4th level. Because again, sometimes I find that is company dependent, but I know you've also worked with quite a few companies through that process. So right. I'd love to hear your thoughts on that one as well.
Well, I meet people where they are. So, the first thing is, if you're planning to do something, you need to have a goal or expectation of what it should accomplish for you. And it would be good to know how much it's going to cost and what your return is going to be. Because a lot of times, business owners, look at some opportunity, but don't really attach any numbers to it. So if you don't have any numbers, you can't really measure how you performed. You don't even really know what you expect to get out of doing it. So, the first step is, real simple. What's your goal? What do you got to put in? What do you expect to get out? And, all the way up to, if it's, a multi-year project or analysis, you might have to do a discounted cash flow analysis and look at, all the cash flows in different periods and make sure you got the right rate of return. But, start from the basics.
Absolutely. That goes back to, to what you already referenced, but that's that other expression, what isn't tracked can't be measured. And from our perspective, it's even the next step, right? What isn't measured can't be managed. So it's not just the tracking of it for measuring its performance, but then actually managing what again, what you do with it afterward is perhaps the most important part. Yes.
And, incorporating, I look at it as many business owners focus on the qualitative, which is important. But, to make the best business decisions, you need both the qualitative and quantitative. And that's where the financial side comes in. And, it touches every single area of your business. So it's not just enough for you to understand finance or have an awareness of how financial things impact your business. It also needs to be other people on your leadership team that may or may not be in finance, so that they can see how what they do contributes to the overall success of the business.
Absolutely. And to that point, and we'll dive into this more, but when it comes to that planning, remember, what we discussed on the metric side of things and the measuring and the KPIs we look at, they're not just financial. So it is very important to have the other people on the management team involved. Whoever that looks like, in every organization, it looks different. But a lot of the activities that they manage are important to both track, what is actually going on and the effect that they have on the company. And it's such an important part of it, which I'm sure we'll unpack as we continue the conversation.
Yes. No. So this has been great. Definitely really talked about what planning is, talked about the 4 levels. And what we're going to do is we're going to take a quick break, and then we're going to just zero in on, really the level 3, management accounting, and a little bit of level 2 before you get into it and, analyzing the financials so that you can do management accounting and really put into place some of those key planning practices for the coming year. So let's take a break real quick. As you may know, we have our Power Breakfast coming up October 29th. It's been 10 years that we've been doing them, and we've had over 1,000 people. We've helped people generate, tens of millions of dollars in sales, as well as millions of dollars in financing. And we're looking forward to doing it again October 29th at the the Park Avenue Club. But if you've never been, it's an experience. And let me just show you a little bit about what it's about. And, we'll be back with Nelson talking small business. If you are looking to increase revenues, improve profitability, and or obtain financing for your business, you need to check out the Power Breakfast and Small Business Pro conferences. My name is Andrew Frazier. One of the things we're here to do is supercharge your day.
Today's Power Breakfast has really been a phenomenal experience. I think it's exactly what business owners need, some true guidance of people who are genuine and really are leading them in the true direction of business growth and expansion.
The Power Breakfast is so important for the entrepreneurial community because it gives the various business people who come together an opportunity to interact and also do some business.
These events, hosted by Andrew Frazier, President and COO of Small Business Like a Pro, will supercharge your day.
Welcome back to Leadership Live at 8:05, Talking Small Business. Andrew Frazier here with Nelson Tepfer from ProCFO Partners, and we're really talking about planning, financial planning, getting your business prepared for the coming year. It's something that's important to do, but it's not urgent, but it's something that you need to do if you want to grow, you want to increase your revenues, you want to be more profitable, you want to get financing. Start out the year right by having the right plan that can help you be successful. Don't you agree, Nelson?
Absolutely, Andrew. Such an important part. And I don't know, urgency is always one of those interesting things when it comes to planning, I think. It always seems to be urgent when you didn't do it. And it's like, oh, yes, we need to. And you look back at why it didn't work for you last year, and it's like, oh, yes, the next year we need to plan. And unfortunately, you just end up repeating the cycle if there is no urgency to make sure it gets done. So it's definitely important. Unfortunately, it's one of those types of things which, again, for many business owners, is tough to get to when they have so many other things right in front of them. But to your point, it is very, very important to help them grow and achieve their goals.
Yes. And, one of the things that I, outline in, my book, The Masterpreneur Playbook, is like a 5-step process to growing your business. And there's an evolution that you have to make as a business owner. And, what happens is what's important and urgent should change for you as you evolve, as your organizational structure changes. But many times business owners get stuck doing the job of the person below them. So, you start out more like an employer supervisor. But as your business grows, you have to become a manager, which is a whole different role. And if you don't do that, then your organization can't grow. But, once you grow to having managers, then you have to become an executive, which is a whole different role. And many organizations get stuck there because the owner is micromanaging the managers. So what does that do? That means your managers who you're paying all this money to become supervisors, and your supervisors become employees. So, people have to do the highest level. And then the final level is, you got executives, and then, really the CEO role, where as you grow, you have managers, you have executives. Your job is to really be on, external facing. And but if you don't let people in your organization grow and you don't grow, then you're stifling. So that it's, even though it seems, unurgent, it depends on what you view your role and your job is at the company. Because this is actually what you do when you're an executive and when you're the CEO.
Well, that's what you should be doing.
There you go. That's what you should be doing. So, really along those lines, we talked about financial statement analysis as the second level. There's a lot of things you could do as far as financial statement analysis, but there's really only a few things that you need to do and you need to look at a minimum. What are some of the key things that you at least make sure that every business owner is looking at in terms of their financial statements and understanding how their business is running?
So there are some pretty standard, again, you can use the generic ones, whether it's the P&L and the balance sheet and their cash flow is probably the most relevant ones for most business. P&L for just where their margins are, they making money or not on different units on, based on, and from our perspective, that P&L becomes important when it comes to, again, making it something which is, you can make decisions on based on business lines that you're doing, based on people who are working on an account, based on geographies, depending on how big the business is. That's how we tend to think of that P&L being insightful, as in where is the area of the business that is actually generating the most revenue, not just the revenue, but the actual most profit for you. So there are a whole bunch of different levels, even in reviewing the P&L from the balance sheet perspective and the cash flow. Yeah, it's important when you're looking at that, because financing covenants that you may have in place, from line of credit to line of credit renewals to other type of loans you may want to take out to explore growing the company, but also just your actual current cash position. And that's not just about how much money you have in the bank, but truly what's outstanding. When is money going to be coming in? When should things be going out? There are so many opportunities for business owners to gain a little bit of leverage in their process just by reviewing this kind of information on a regular basis. Just changing when your purchasing happens can sometimes be all the freedom you need that will ease up your cash flow. So you don't need to draw your credit line throughout whatever period of time you're going through a slump or seasonality aspect of it. So truly understanding these statements, how they play together, just very often that insight alone can be game changing for many business owners, because without coming from a place of not having that kind of knowledge or insight creates certain problems that are systematic, and we tend to see them quite a bit.
Okay. So yeah, so definitely you can get a lot of information from them. Looking at them, a lot of those are the key things. I work with a lot of smaller businesses also. So at the minimum, as a business owner, you got to look at your sales and your revenues and how they're changing. You got to look at, if you are a product business, you got to look at your inventory, because you don't want to have too much money tied up in your inventory. And you got to look at your margins.
Yes.
How profitable are you on a gross margin and net margin basis?
And as we think about it, again, when you're talking about shifting this into that insight or planning aspect of it, how profitable should you be?
Correct. And with small businesses, I've worked with clients, we've made them twice as profitable on the same revenues.
Absolutely.
So
absolutely, we've had scenarios like that where they were not as profitable because of the way certain things were running, which caused them to have higher costs, as a result of that, which is exactly what you're referring to. So sometimes it is going back down, and that's why we call it that framework, that flywheel that we talk about with our clients, because all these pieces get connected to each other. Whereas, it's not just just looking at purchasing in a vacuum. It's not just looking at cash flow in a vacuum. It's how does your systems and processes affect that cash flow, which causes the higher cost of capital when you need to go to a different source of financing because you don't have the right things in place at that level. So all of these pieces get put together. It is interesting to me, and you've come across this as well. And sometimes this isn't even the size of the business. Business owners, we've had conversations with where it's about, I get the conversation with Nelson, he tells me, Nelson, this company is too big for me to run on gut instinct alone. And that's what we talk about with this framework, and what we were talking about with the insight they should be getting from this, and what needs to be built within the organization to give them that insight so they actually feel comfortable enough making the decisions they need to.
Yeah, no, I mean, definitely, that's key. But not only that, working with business owners on succession planning, eventually you're going to want to leave, but you want your business to be successful. But not only that, you're going to want to not have to be there as much as usual. And, if you don't have good reporting, you don't have a plan, then you're not going to feel comfortable not being there.
Absolutely. And it's not even just the comfort level. Their point, if they want to sell the business or pass it down to the next person, the value of that organization is very often built on how functional the business is without that business owner. So anyone who's thinking of whatever succession planning means to them, again, whether that's passing it to an employee who's going to buy you out, passing it on to family members, or selling the business, any of those scenarios only benefit from having a robust financial reporting system that allows anyone who's running the company to see what's actually going on a regular basis, and more importantly, make the decisions they need to.
Okay. Yeah, no, definitely. And I'm sure you, as well as I, have worked with business owners who wanted to sell, but their business wasn't quite ready to sell, but they didn't have enough time or the ability to make it ready to sell. You talk a little bit about that and what they leave on the table by not doing it.
So the worst case scenario I've seen of that was, where again, business owner, again, due to unfortunate circumstances, needed to exit the business. It wasn't because the business itself business was doing okay. It wasn't in stellar shape, but it was okay. And because of the time frame that he was working on, unfortunately, I had to actually end up dissolving the business because the way it was currently structured, they tried brokering it to a few different people to actually talk about selling the business, and none of them were able to take it on just because of how poorly the financials, more the shape that the financials were in, and the reporting that was in place. Now that obviously is an extreme, but the other scenario, and again, this is something every business owner should really be thinking about. Running a business like you're going to sell it helps build in some of the rigor and acumen that's required to actually run it successfully, regardless of if or when you choose to sell it. Because not having in place when you suddenly decide to sell, then the valuation that you end up, again, to your point, what you leave on the table, the valuation is so much lower because you're key to so many of the processes. So anyone who's looking to buy the business says, well, if you're not going to be here, even if they're going to be here for a certain period of time, the business is not worth as much without you here. So building out these systems and processes in place, though it runs without the business owner, becomes important. But even just the financial reporting, having something like that in place allows any buyer to take a quick look and do their due diligence much faster and much easier. That allows them to offer the valuation that business owners would be looking for. Now, of course, almost all business owners, I believe, tend to believe that their business is worth more than it is. So if they are thinking about selling, starting that conversation about how a business gets valued as early as possible becomes important. So the right levers to pull and push that will actually increase the valuation when you're looking for it.
Okay. Yeah, but I would beg to differ with you on your example, because you said that's rare, but I'd say it's probably not rare, because most businesses never sell and close down. So even the owners.
Well, I was trying not to frighten too many of the audience members, but it's it should be rare. Is probably the better way to put it. It should be rare, but you're absolutely right, Andrew. It is far more common than it should be. Yes. Whereas they've spent their careers or whatever period of time building this business, and it just ends up dissolving essentially because it's not built correctly to continue as a going entity without that business owner directly involved.
Yeah. And it happens more often than not. And sometimes you need a wake-up call. It's better for them to learn now than at the end, because a lot of time, well, actually mostly every business owner thinks their business is worth more than it really is. But that's your nest egg. So you have to protect it and protect the value.
And the other side of that, I always say that those two fallacies that business owners approach that transaction with. One is the one we just discussed, that they think it's worth more than it is. The other is they all think the transaction and the process happens faster than it does. And that's why we encourage anyone who's even thinking about it, start building that team of advisors around you, whether it's evaluation, whether it's your attorney having a conversation around tax implications, whether it's your lawyer about what does succession look like and drawing up those documents correctly, what is the different structures you can look at. Always start that conversation as early as possible. There is there's that running joke, when do you think about selling or exiting your business? Is the day you start it type of thing, which obviously is a bit extreme. And I think that's mainly from lawyers who want to just, have that business about, having those conversations early on. But it is a very important part of that process in planning for whatever that looks like. 3 years out, 5 years out, 7 years out. There really is no time that is too early to start thinking about it, in line with what we already started our conversation with, that planning. If you're thinking about a transaction in 5 years from now, how does that change how you're going to build a business over the next 5 years?
Yep. And, if you're a business owner, I always think about trading places. Like when I'm talking to people about getting financing, before I'm like, I give them, in the training, I give them 3 business examples. I say, would you finance these businesses? Which one and why? And that makes them shed some light on, what they're going to the banker. They're like, oh, well, I couldn't make a decision because there's not enough information. But people go try to get financing without having their information, or their plan doesn't makes sense. So, even with this, if you step back and you look at it from the buyer's side, what do the buyers want when they're looking at buying a business?
So that goes back to a little bit something we touched on earlier, is they want clean, simple, easy to understand information. And they want to understand how that information gets generated and making sure it's as relevant as possible for what they're looking at. I do recall having a conversation recently with a business owner, and essentially that's what we started our conversation with is we're going to look at your company like a buyer would, and we're going to come up with a list of concerns that we have based on if we were sitting on the other side of the table. Now, we were not representing anyone in this transaction. This was literally to go through this exercise with the business owner so they start thinking about it as they plan for the sale that they're thinking of, as they want to consider. And that process for them really shed light as in their financial reporting system is not good enough for what they're trying to do. Now, this is a very, these significantly sized company. They're, the business owners were very comfortable with what they were doing. And it's a great business. The problem, as I explained to them, is it's not about how good or bad the business is, as you describe it as a business owner. It's what it looks like on paper. It's what you can show somebody. Of course, there's an element to the story which helps, and just drive some of the valuation, or as people see those opportunities for growth, rolling it up into other organizations. But at the end of the day, a lot of times it just comes down to what is the information that gets generated on a regular basis? What does this information look like for them to be able to analyze it and see if it makes sense? And it can't just be, well, we reconciled, once a year for tax purposes. Ideally, it should be monthly type of reconciliations. Again, I'm not saying every company needs to have audited financials, but just the process of closing the books timely on a monthly basis creates that better insight into what's going on a regular basis. What does the trend look like? Again, you show just one data point on a yearly basis. It certainly makes anyone who's considering buying it, a lot tougher for them to make that decision.
Okay. Yeah, no, I mean, definitely those. And one of the other things I think about is, if I'm going to buy a business and I have enough money to buy the business, I don't want to run it. So if I got to buy a business that I got to run, then I'm not really that interested in it, or I'm not willing to pay much for it, because then I really got to build the business.
Exactly. So the valuation gets much lower for if they're willing to make an offer, or the structure changes. It'll be much more on the earn out. Like, okay, if it ends up making the money I think it'll be, then I'll pay the business owner more money, instead of, again, the business owner thinks, great, I'm going to sell all this money, I'm going to go retire on my yacht in the middle of the Atlantic Ocean. But if they're not structured, again, if they don't build the business correctly, then whoever's buying it is going to want to tie them up to be involved in the business for longer, is going to structure more of their payment on the back end of it instead of just as the buyout price and walk away. Well, I'm curious, what else have you seen in that space when it comes to these types of transactions and business owners planning for them?
Well, I think one of the biggest challenges is you got to have a leadership team, and you really have to have someone to take over your role, and that's ready to do that. And so it's important to groom and develop your people. I think that as business owners grow, it becomes challenging because they have to bring in new expertise to the organization, but it's hard because everybody and you have relationships, but not everybody can move up and perform in the roles that need to be filled. So just because you're a good employee doesn't mean you're going to be a good supervisor.
Absolutely. And it is a challenge we see across businesses of all sizes and industries and ages. Established businesses go through the same issues on a regular basis when it comes to that challenge. One thing I like to point out, and as you advise the companies you work with as well, beyond a certain point, most businesses have who problems, not how problems.
Yep. So, yeah. And, that's important. And then it becomes even harder when you're growing, because you may have never paid anybody that much in your business. So it's really hard to bring someone in new and pay them that type of money, especially, you may have been struggling for a while and they may make more than you were making. So, but if you don't do that, it's really hard to move forward in the way you need to. So, people problems. I'm a big fan of Michael Gerber, the E-Myth guy. And one of the things he says is you can't manage people, but you can manage systems. So you use systems to manage people rather than trying to manage them directly. And, that's one of your jobs is to really set them up and set up a culture around, the traits and the things that you want to move your organization forward. So, one other thing, one of the most important things, and I think a lot of business owners miss, and that's why a lot of businesses go out of business or they have very low or no growth, is they don't plan to grow. I'm like, any business you are, if you're a business, your growth goal needs to be at least 10%. And if you're below a certain amount, your growth goal needs to be 100%, or somewhere in between, because it doesn't happen by itself. So how do you approach talking with businesses about growth and, what they should be doing, through the planning process, and, really looking at their business, because that forms the one of the biggest parts of your valuation is your growth trend.
Absolutely. So we're gonna back that one up just to the planning part of it, and then we can get into how that affects that valuation and that trend. So when we talk about the planning part of it, and we touched a little bit on this earlier, but that full cycle process looks something along the lines of, okay, we go through their goals in the planning side of things in the 5-3-1 as an exercise. Meaning you start with your 5-year, then your 3-year, then your 1-year. Identify the goals for each one of those periods, as well as identify the measurable targets for those goals. Now, again, 3 and 5-year are going to be a little bit more vague, perhaps, for some organizations, as we don't know where we're going to be in 3 years. We don't know where we're going to be in 5 years. And again, that's very typical. But put it down on paper. What is your goal to be in that period of time? Because it has you start thinking about it as you go through next year. Now, for next year is when you have obviously a lot more specificity. When you say, okay, this is our goal as a result of looking at 5 years and then 3 years and then 1 year, and we do it in that order on purpose. Because if you do 1 and then 3 and then 5, we find most of the time that process just looks like a bump up or step up process. Okay, this is where we're next year, and then automatically here for 3 years, and automatically here for 5 years. As opposed to if you approach it the other way around, you can set that 5-year goal significantly higher, and then you work backwards to actually figure out how you're going to do it. But again, once you identify the goals and the measurable targets for those goals, for instance, we want to be the largest, whatever it is in this area, in this state, in this, we want to be recognized in this market. We want to have this, again, defining those goals. The measurable target can be the revenue. Sure. We want to have, this number of revenue. We want to be 5 million in revenue. We want to be 10 million in revenue. We want to be 100 million in revenue. Because once you identify those, then comes the next part of actually putting that into action. And that because, okay, what are the strategies that will help us achieve these goals? So we want to grow revenue. Okay. Do we have the operational? Then it becomes looking at internally. A, do we have the operational throughput to handle it if we do? Or B, do we have the salespeople to bring in that revenue? So then it becomes, okay, what is the strategy that we're going to go to market with? Which customer channel is it going to come from? Which revenue stream is it going to come from? Getting clear on what that strategy looks like. And when it comes to getting this detailed, then we tend to look more at just a 1 year. Or if we can, we break it up even into quarterly. Just to say, okay, this is how we're actually going to approach it. Now we have a specific action item list of how we're going to go ahead and do this. So you develop those strategies, then it becomes measuring how well we are towards achieving those goals. What are the KPIs we're going to measure that says how well we're taking action on the strategies we implemented? Again, is it number of meetings per week? Is it the margin we're going to look at for each customer? Is it the margin we're going to look at for this business unit? If that's one of the goals we identified, is growing this business unit. Whatever we're choosing to look at as the strategy perspective, identifying those action items and coming up with those KPIs, those key performance indicators that we actually look at on a regular basis that says how well we're progressing towards achieving these goals. And perhaps most importantly, as we've defined, becoming that supervisor and then the manager and then the executive and then the CEO, who's accountable in the organization for that KPI? That's not about who do you hang out to dry, when something goes wrong, but within your organization, who is accountable for the KPI that you set? Yes, they're going to have the help for the rest of the team to actually go do this, but someone needs to own that KPI to say, okay, this is my responsibility to look at and measure and see if we're going off track. What resources do we need to step in to actually make sure we go back on track so we can actually achieve this? And through that entire process is how we tend to look at that planning process on a regular basis to say, are we actually on track towards achieving these goals? Do we have this in place that's going to allow us to continue to hit the targets that we set? That's how we think of this process, so it actually becomes something that business owners can actually execute within their organization.
Really, definitely great points and, ways to look at it. I mean, it's important to think about growing every year. And, because, if you're not growing, you're really dying in this environment because, there's competition, so many changes, you got to be in the game with a plan and strategy. But, I liked how you talked about, the KPIs and, really everything in your financials touches everywhere in your business. And, if you have your plan, that means the salespeople know what their target is. That means the marketing people know what their target is. That means your operation people know where they're supposed to be.
Customer service. We've seen KPIs around customer service. They recognize that as one of the key things that makes them different in their marketplace. So they knew they had to make sure that the customer service maintained at a certain level. So companies created a metric around customer service. Now, this can be specific. It can be a customer satisfaction survey they do on a regular basis. It can be how quickly they answer an email or complaint or response. There's any number of ways to measure it, but this particular company recognized that as one thing that made them different in their space was their level of service, and they created a KPI around measuring how well they are at providing the service.
Yep, and it doesn't happen without a plan. Exactly. And really, that's what planning is at the end of the day. Very important to be able to do that. You mentioned the 1, 3, and 5 years. Got a comment from Christine, and really, liking that. It's a good way to approach, and definitely you got to look to the future. And you may not know what it holds, but you can always know what you want it to hold, and that's really what matters the most. So time goes too fast. We're already pretty much at the end, which, these hours go really fast, but that's why I enjoy doing this so much. So what I like to do at the end is, have the guests really just take a second, think about 3 key things that we talked about today that a business owner can take away and implement immediately within what they're doing. We'll give you a minute to think about it, but definitely it's helpful to for business owners to we talked about a whole bunch of stuff, but if we say, okay, what are the first 3 things you should do now if you're not doing them, talk about what they are. I'm going to play a quick video to give you a chance to think about it for a minute, and also just to introduce my new book. And we'll be back with Nelson, and he can break it down for us, and then we're going to close out. Sounds good?
Sounds good.
Okay.
Yeah, this is my most recent. It's not even available yet.
Oh, it's not? Okay.
The Masterpreneur Playbook.
Okay.
And really, we talked about is there's 5 steps to growing your business.
Yeah.
And, really laying out what those steps are, but not only what the steps are, how do you transition through them? And, each stage, you have certain things, there's a certain challenge that you have to overcome.
Right.
There's a certain goal you have to achieve.
Right.
There's a certain role you have as a business owner.
Right.
There's a certain structure that you need to have within your business to support that role and move into the next role. So each step, I lay out what those things are.
Wonderful.
Because each one of those has a key skill that you have to have as the business owner. You have to evolve and continually learn or you're going to get stuck. You can only go as far as you're prepared to take.
Welcome back to Leadership Live at 8:05. I'm here with Nelson, and we're talking small business. Today, we focused on planning for uncertainty. This is the time of year for planning. We talked about failing to plan is planning to fail, and that you need to grow. So tell us, what should we be taking away from this conversation to really tomorrow start to think about and work on?
So I'd probably say number one is you have to figure out what that planning process looks for your business and probably tackle that. You have to get a lot more strategic about planning. It's not just about, okay, what am I doing today, tomorrow, or next year, but thinking about it in the bigger and broader picture of where you're trying to be in whatever period of time you choose to say is the timeline you're setting for yourself. So getting a lot more strategic about your planning is probably pretty key as we head through the fourth quarter and look ahead towards 2022. The other two are probably more in support of how that actually looks in practice for your business. So it becomes, making sure you have a good monthly close, so you have the insight into what's really going on, and you have the KPIs you look at on a regular basis. Again, we think of that in the terms of measuring how well you are towards achieving your goals, but the KPIs are both financial, are operational, are based on the goals that you set. So make sure you have the information you need to measure those on a regular basis and provide you the insight into making the ongoing decisions within your business. And then lastly, it's be aware of what's going on in the marketplace. We think of this as, so many businesses have changed over the past, what are we up to now, year and a half, 2 years in the COVID environment. So be really clear about what is the problem you're solving for in the marketplace and what is your solution. Is that still the same thing that's relevant? And I think this goes back to that planning, because businesses very often get stuck on, I'll call loosely a little bit sometimes automatic, as they just keep doing the same things because that's what they've always done. But being real, again, approaching this in a strategic manner to say, okay, is the current market conditions and my approach to them still relevant, or should it still be the same? Or do I really need to change this as we move forward because market conditions, what I can offer in this space, have changed around me?
Okay. All right. Great. So there you have it. Some great insights, some great things that you can implement. And, this has been tremendous. It's been a really quick hour and probably the best hour of my day. That's why I love to do this. So that's why we're talking small biz. So thank you, Nelson, for taking time out of your busy schedule to join me this evening and, just being willing to share your expertise with other business owners so that they can have some valuable insights about how they can lead their organizations forward more effectively.
Andrew, thank you for the invitation. Thank you for having me on.
Okay, great. So we'll have to do it again, but definitely hang out for a minute and I'll close everything out and we'll be good to go. So let's see. So once again, Leadership Live at 8:05. Really had, great session. Nelson shared some good things, appreciating feedback from, guests on LinkedIn. The three key things, very important. Appreciate you joining us and your feedback as well. And let's see, definitely Nelson shared some great advice and some great points. So, once again, every Tuesday night, 8 p.m. Eastern, we've got Leadership Live at 8:05, talking small business. And, we've got the Power Breakfast coming up at the end of the month. So definitely encourage you to check us out. If you want to learn more, you can learn more at www.thepowerbreakfast.com, as well as, if you want to go online, I put it in the chat so that you can learn a little bit more. It's here in Florham Park, New Jersey, and always a good time. And we focus on supercharging your day with learning best practices, enjoying great networking, and gaining useful knowledge. And that's what we're all about here. So thanks again for joining in. keep in mind at the end of the day, the more you know, the faster you grow. And that's why we do this.
Thank you for listening to Leadership Live at 805, Talking Small Business. Subscribe to our YouTube channel and to the podcast on your favorite podcast platform. Leadership Live is one of the many valuable resources provided through the Small Business Pro University, empowering business owners to learn, profit, and grow. Find out more at sbpro.u.com.